You're listening to Charting Wealth's weekly review and forecast for the week beginning Monday, the 21st of November, 2016, Thanksgiving week. What do we see going on in the market? Well, we have 2 weeks of up movement in the total market. We always start with IYY. As those watching by video can tell, and I will tell those listening on audio, we still have a downtrend on the weekly chart. We still don't have a crossover on our main indicator, the PPO, which is just another version of the MACD, the Moving Average Convergence Divergence. The PPO is the price percent oscillator. Looks just like the MACD, except it uses price percentage instead of dollars, which means you can compare it more easily to other things. That was suggested by JH a few weeks ago, and we started using it. Still don't have a crossover. Derivative oscillator still in the negative, but losing energy, so it looks like we could be moving toward a crossover going up toward the end of the year. Happens often, and we could be seeing that occur, but we'll continue to watch and just see if the Trump effect and the Christmas effect, holiday effect, does kick in this go round. But right now, 2 weeks of solid up movement. The thing to pay attention to, though, is we still haven't yet had a crossover in the total market going up, so we don't call that yet. We do have the 2-day chart going up, and our 2-day trend line, it actually bisected over the course of the past week the weekly downtrend line. So again, looks like that downtrend's getting weaker, but it has not crossed yet. So until it crosses, we don't call it. What went on during the week? Well, the week started on the 14th, and really we just had movement throughout the course of the week up. In fact, that is on the daily chart. We've seen since the 7th, the charts moving up. We had one red open box candle on the 11th of November, but it's been just a smooth build as the market has gone up. One thing to notice, though, on the daily chart is it has been losing some steam since it topped out on the 15th, Tuesday. And again, when I say topped out, the derivative oscillator topped out. And we do see that the MACD is not rising to the same percentage, or the PPO to the same level that it was before. It's kinked over a little bit, not quite parallel. So we'll continue to watch. Maybe the market's peaked out. We will not call it that yet. What we do call, still in a confirmed downtrend on the weekly chart. Mark that for IYY, the total market, on your weekly charts. And just make sure to pay attention. We may very well have a switchover by the end of the last week, but we're in a confirmed up move. Now, let's go next to SPY. That's the Standard & Poor's 500 on the weekly chart. What do we see? Again, 2 strong weeks of up movement, getting closer and closer to a potential crossing over on the weekly, but it's not crossed yet. Those of you with the daily market worksheets, mark the weekly chart still as down. But the way that I do it is I don't draw that arrow straight down. I draw it a little sideways, meaning that it's and about, what would we call that? About the 4 o'clock position, meaning that it's trying to turn around. So be cognizant of that. Now, if we look intra-week, I'm used to saying intraday, we look at the daily chart, we see, again, very similar to the total market, lots of strong up movement. The only little break there was on the 11th of November. Derivative oscillators losing energy, and the MACD still going up, but not as strongly as it was. And I keep reverting back to MACD instead of PPO, but habits die hard. Now, let's look at the Qs. What's up with the Qs? Oh, and on all these charts, at the end of the week, IYY was down 0.25%. The S&P 500 down 0.22%. And the Qs, which is the NASDAQ 100, down 0.37%. That's just the last day on Friday. Now, the Qs presents a really interesting chart to us on the weekly. It crossed over only back on the 28th of October, going down. Still in a confirmed down move, had a huge down week on the 4th of November, had a spinning top on the week ending the 11th of November, and we have a doji on the week ending the 18th of November. What does that mean? Well, remember, dojis are our biggest undecided. It is literally just lots and lots and lots of indecision. Spinning top can be indecision, but a doji is even more indecision about where to go. We do see the PPO is still trending down, although it's almost sideways. The derivative oscillator actually gained a little. Well, let's see. It's hard to tell. It's about the same as it was the prior week. So as far as the big chart goes, we're still in a confirmed down move on the NASDAQ. We're still well below the weekly trend line. We are above the 2-day trend line. Now, if we look intraday, so again, make sure you mark your daily market worksheets down. Now, what do we see going on? Well, we had the week open with a down move on the Qs. We then saw on Tuesday, Wednesday, Thursday, and Friday up moves actually getting stronger throughout the course. Now remember, we did say that the market was down on Friday. The Qs was down, but we're dealing with the average pace. That is what the Heikin Ashi candlesticks are about. That's why we use them. They help us look at pace. And the Heikin Ashi shows you that the pace is continuing to move up in the Qs, even though it was down for the day, all the way up to touching the weekly trend line, above the 2-day trend line. So lots of indecision. Pay attention to that as the week starts on the Qs. That indecision could result in a bounding up or down movement. What happens if the Qs rotates over and goes down? Well, you'll look for that on the 4-hour chart. We'll talk about this in the daily forecast for Monday, the daily review and forecast for Monday, which we'll record directly after this weekly one. So listen for both for that over the weekend. Of course, you're listening to this one now. So that's where we are on the Qs. We are in a confirmed down move on the weekly and the 2-day, but we are seeing pushing up on that daily chart on that weekly trend line. So we'll just continue to watch. If we see that 4-hour chart rotate over going down, it could be a great jumping in point for a down move on the Qs. Lots of indecision on the Qs. Okay, our last chart we're going to look at before we go to the news. We're going to go back to our weekly chart. We're going to look at gold. Gold down big, 0.86%. Big down week for gold. Gold has been going down on our weekly chart with the crossover on the PP all the way back to the 12th of August, the week ending the 12th of August. Lots of huge down moves in gold. This is the biggest week yet. The week ending the 18th of November, gold down big time. The opening on the week was at 121.12. The last was 115.88. That's lots of down movement and gold. Got all the way down to the 114s. Now let's look at, and again, that down movement has powered up with the PPO angling, continuing a good strong down angle, and the derivative oscillator heated up. Now if we look on the daily chart as to what's been going on, we can see the daily chart rotated over back on the 10th going down, but for 2 days, the 15th and the 16th, everything has been going down. Monday started off big down, then it really just slid sideways on the 15th and 16th, and then down again on Thursday and Friday. So gold continuing to move down. Now remember, our chart that we use to practice trade gold is, of course, our 4-hour chart. We'll be talking more about that on the daily review that we'll be putting up next for Monday. Now let's jump into the news. What affected the news over the course of this last week and what might be affecting it in the coming week? Well, Janet Yellen. And remember, the Federal Reserve controls everything in the world when it comes to the markets. I'm saying that tongue-in-cheek, but I'm afraid it's probably true. But Yellen came out saying to the Joint Economic Committee of the U.S. Congress that the economy was making good progress, and she thinks that a hike is going to come relatively soon, probably going to be something like 1/4 of a point, and we'll see how long that lasts. That'll probably happen at the December meeting. Everybody is expecting that, so we shall see. Even with the presidential election, that did not alter the Fed's assessment. What's happening with Trump? Well, it looks like the chairman of the SEC has resigned. That brings the actual members down to just 2 members of the 5-member board. President Trump, when he takes office, will be able to appoint new members to the Securities and Exchange Commission. We also see the Trump team beginning to take shape as the cabinet's starting to be filled out slowly. We also saw strong retail sales, both in the UK and in the United States going into the Christmas season. That's nice. We saw the Bank of Japan As far as the government bond sell-off, that sort of got backed off, which was good for Japan, negative interest rates and all. And we also see when it comes to Venezuela, a lot of the multinationals are dumping that socialist community with chronic shortages of everything and runaway inflation. That's what happens when the government runs everything. Let's talk about, and of course the biggest thing takeaway over the course of this last week, lots of good economic news, lots of positive reception by the market to the new President-elect Trump. Not what you were being told, but what we saw in the charts, my friends. Another reason, follow the charts, not the noise. Don't pay attention to the pundits who are trying to sell commercial airtime. Pay attention to what these charts tell you. That's why I don't listen to any of that goop that comes over the airwaves. I do glance at the Wall Street Journal just because it's entertaining. I watch the charts, and I encourage you to do the same. And I check out the news, what moved things once a week, and then I look at what we're about to jump into in the week ahead, what might be affecting the market. U.S. home sales, that data is going to come out on Tuesday. That is Tuesday of Thanksgiving week. We will see what kind of impact that actually has on the market, whether that existing home sale data is super good or super bad. Sort of in the middle, things will probably stay the same, super good or super bad. It'll affect the market. Global Flash Purchasing Managers Indices are going to be released on Wednesday. If they're particularly good or bad, they'll have a big, not necessarily a big impact. They may have an impact. The big thing is going to be that home sale data. Minutes of the November Federal Open Market Committee meeting are also going to be released on Wednesday. That could have the most impact of anything. So again, keep your eyes and ears out on Tuesday and Wednesday as to the impact of those things. Remember, the market's going to be closed for Thanksgiving, and then it's about just going to be a little short trading day on Friday. One thing will come out on Thursday while the markets are closed, and that's the Q3 gross domestic product reports from Deutschland, from Germany. So it's going to be an interesting little shortened trading week. Again, let's see particularly what happens with the Qs. And that to me is the one where it might have the most opportunities, particularly if it rolls over. Now, it may continue to move up. We'll just pay attention, see what we see. Make sure that you've marked all your charts. Gold, confirmed down move, and all three of our indexes still confirmed down moves on the weekly charts. If you're not using your daily market worksheets, you're not doing all you can do to rapidly progress in learning how to read stock charts. The most important thing you can do for learning how the market works and how to make money in the markets. If you can read stock charts, you can actually have your own printing press. Now, people will say, wait, I'm a value investor. I invest in companies based upon what they're valued at. I'm like, that's great. But do you want to pay more for that valuable company than you have to? No, you don't. You want to buy smart. The charts will let you buy smart. So wherever you fall, these charts, this charting knowledge is the key. It is the key. Once you unlock that treasure chest, then you can really, really do well in these markets. What we want you to do in the meantime, open yourself up a trading account and set up a virtual account on any of the big online brokers and start learning how to buy and sell virtually. It'll work pretty much the same in the real market when you're on a good platform, and there's plenty of good ones out there. And as you progress and as you get good at it and as you practice and as you keep up your daily market worksheets, after a while, maybe a long while, but after a while, you will get good at this. And let me tell you, 10 minutes a day is not too much to ask, meaning that you can potentially retire and be well off financially based upon this kind of knowledge. So practice. Remember though, perfect practice makes perfect. So work hard, practice, listen every day, fill out that daily market worksheet, listen to the weekly review and forecast, and just do it. Just do it. God bless you. We appreciate you being with us from chartingwealth.com. Hope that you have a great weekend and a wonderful week and a great Thanksgiving. We'll be with you all the way through Wednesday. Take care. God bless.